Hello everyone, welcome to JIB CIB English Medium channel. My name is Aarti and I hope you all are doing good. So basically if you are planning to clear your CIB in your first and single attempt, then remember this series will help you in that preparation. Because in this series we are not just completing ABFM but along with that we are completing all your four compulsory subjects. So without any delay, let's start today's session. Today we are going to start module D from your ABFM. That is going to be first unit from D. That is unit 19, hybrid finance. Yes, so this unit is very interesting unit because already you have read this part in your module B, unit 7 under your sources of funds. So this is going to be similar with that topic. So let's start this session without any delay now. So first we need to understand what is the meaning of hybrid. Yes, so hybrid means what? Hybrid means when you have more than one thing. Yes, basically you are going to combine more than one thing, like one and two. When you're combining two things, that is going to be hybrid. Yes, so when you see combination, yes, you can see this is the combination of what? Combination for taking funds. Yes, finance means what? Finance means funds. So we are going to combine, we will see that combination through which we can generate funds. And what combination? Basically, acha, if we are not aware about what is the meaning of hybrid, let's leave this term for a minute. Yes, if I ask you what are the ways through which you can generate this funds, you will say we will be using equity by issuing your shares or by going for debt. Yes or no? Correct. Borrowing from public, from bank, loan, like this. So similar answer you will also give me that if you want to generate funds, you will use your own funds, yes, your own money, or you will borrow from public. Yes, so these are two things which we classify as equity and debt. Now, so now we will combine these two things. Yes, we are saying a hybrid. Hybrid means we want combination of more than one thing. What one more than one thing? That is going to be equity plus debt. Okay, means now we are going to combine these two uh, factors and through that we will be generating this funds. That is going to be your hybrid funds. So hybrid financing includes characteristics of both debt and equity. Now, two ends within the financial spectrum in order to provide financial security. So basically, when we are going to talk about hybrid funds, we will be generating from debt and equity, which is known as hybrid funds. Funds you are generating and how you are going to generate this time, you will generate in the combination of debt and equity. Yes, so this is the meaning of hybrid funds. Now, there are different types of hybrid securities which you need to remember, and this part is very important because in each and every attempt they are asking questions based on this. Okay, like they can ask question from preference shares, foreign currencies, convertible bonds, from warrants, mezzanine financing. Yes, from convertible bonds, they can ask from any particular topic. Now, you know what is the interesting part? Already, you know what is the meaning of preference shares. है But again, we will be revising this preference shares, so don't worry about it. And you will see some new topics as well. So let's start with types of hybrid securities. So there are five types of hybrid securities. Hybrid means here you will see the combination, you will see the features of both the things, equity as well as debt. Okay. Achha, before we proceed, let me give you quickly difference between debt and equity. Yes, in equity, you are giving ownership, yes or no? In debt, no ownership you are providing. I hope you remember this part. Yes, in debt you have some specific maturity. Yes, in ownership, no specific maturity is there. Correct. In debt you will get redemption amount plus interest, and in this equity you will get what? Dividends. Yes, you will get dividends. So these are very common, you can say differences between debt and equity. So let's start with the very first type of hybrid security, that is preference shares. So preference shares referred to as preferred stock. Yes, how you will say this type of share as a preferred stock. So basically when we talk about share capital, okay, we say share capital is divided into two parts. One is your equity and next is your preference. Okay, so we are going to talk about this preference. So this preference is also known as preferred stock. Now why we are calling it as preferred stock? Because here shares of a company's stock with dividends that are paid out to shareholders before common stock dividends are issued. Common stock here means your equity. Common stock here means equity part they are saying. Preferred stock means your preference part. Acha, I hope you can recall, differences between what are the differences between equity and preference. Acha, let me give you that part as well as very quickly. Okay. So in equity you will get ownership. Yes. In preference, no ownership. Then in equity you will get right to vote. In case of preference shares, no right to vote. So why we will be purchasing preference shares? Because here you will get fixed dividend. Yes, what you will be getting? Fixed dividend. No fixed dividend. Yes, then finally you will be getting preference at the time of liquidation over equity. Yes, here no preference will be given at the time of liquidity. Liquidity means when your business is finally closing, they are working and everything. So first they will pay to preference shareholders, and then whatever amount is left, then only you will give to the equity. Otherwise, no amount will be paid to the equity. So these are the differences between your preference and equity. Yes. Now, if the company enters into bankruptcy, preferred stock holders are entitled to be paid from company's assets before common stock holders. Now remember, when we are talking about, preference shareholders. So preference shareholders, they will compulsorily receive some amount at the time of liquidation. If company is not able to pay any amount, then what company will be doing? Company will sell their assets, their fixed assets, and then they will be paying that amount. Yes. So let me tell you quickly how we are going to classify, uh, you know, um, at the time of liquidity, how we will be paying the amount. Remember, first you will be paying amount to debt. Yes, debenture holders, bank loan, suppliers, creditors to them. First you will be paying to them. Then you will pay to preference shareholders. Yes, then you will be paying to preference shareholders, and finally at the end you will be paying to equity. So this is the classification how you will be paying to one after one. Yes, you will start with debt holders, then your preference shareholders, then you have your equity. So this is about your preference shares and related terms in which you can get confusion. I hope this part is clear to everyone. Now, coming to very important part of this preference shares, that is types of preference shares. Yes, already you have read this part in module B. Yes, unit 7 under sources of finance, but let's revise it again. So, first you have cumulative preference. Cumulative preference means what? Shares give means here shareholders get the right to receive cumulative dividend payouts from the company even if they are not profitable. Yes, what they are saying, if company issues this cumulative preference shares, and let's say company is earning, profit. Let's say here you have financial year. This is your 24-25. Company earn, yes, company earning. Let's say here profit. So company will pay dividend. है ना? Company will pay dividend. Let's say this is 25-26, company again earned profit, company will pay dividend. 26-27, company incurred losses, no dividend will be paid. Then 27-28, company earned profit again. So this time here in case of financial year 27-28, company will be paying dividend of this 26-27, your previous year. Yes, this is a previous year plus current financial year, that is going to be 27 and 28. That is the meaning of cumulative preference shares. Means your right to receive dividend will never lapse. Yes, your right to receive dividend will never lapse. That is the meaning of cumulative preference shares. Yes, similar to this, you have Non-cumulative preference shares. Acha, before we discuss non-cumulative preference shares, let me tell you one more point that always when you are paying dividend, and whenever you are going to talk about dividend, you can pay only when company earns profit. If company earns profit, then only pay dividend. Otherwise, here you need to, lapse this right. Correct, Chali. So next is your non-cumulative preference shares. Opposite of this cumulative, that is non-cumulative. If company earns profit, of course they will give dividend. But as soon as company incurs losses, company will distribute dividend? No. Company will never going to distribute dividend. Then next year, what if in this example, in financial year they are saying 27-28. Yes, company again earn profit. So how company will be distributing this time? So let's continue that same example here. This is your financial year. This is your earning. Okay, and this is about dividend. Let's say this is your 25-26. Company earn profit, will pay dividend. 26-27, company incurred losses, company will not pay dividend. Again in 27-28 financial year, company earned profit. This time in case of non-cumulative, company will pay dividend for previous year 26-27 as well. No, this time they are not going to distribute that. They will be distributing only for current financial year, that is 27-28. Yes, so this is the point which you need to remember. In case company incurs losses, so your right to receive dividend will carry forward? No, that will lapse. In case of cumulative, your right to receive dividend, actually carry forward it to the next year. But in case of non-cumulative, no carry forward. If company incurs losses, you will not receive any sort of dividend. Means your right to receive dividend will lapse. Yes, so this is about non-cumulative preference shares. I hope this point is clear to each and everyone. So this is your first two types of preference share, that is cumulative and non-cumulative. Now coming to third type, that is going to be participating preference shares. Now in addition to the right to a fixed dividends, these shares give the holder the right to participate in any surplus profits that remain after equity shareholders having paid dividends at a predetermined rate. So ultimately, if you see preference shares here, always you will be receiving fixed dividend. But as soon as you are receiving participating, you will not receive only fixed dividend. Here you will be receiving share from profit. Yes, here you will be receiving two things. First, your fixed dividend always. Next, share from profit, that is participating preference shares. Then non-participating preference shares, opposite of participating. Here you will receive only and only your dividend. Yes, fixed dividend. Only fixed. Only fixed dividend. Yes, so this is about your non-participating preference shares. So basically, uh, you have first that is cumulative, then you have non-cumulative, then you have participating, and then you have non-participating, in which you will be receiving only and only fixed dividend. Then you have redeemable preference shares. Redeemable preference shares means you will be issuing preference shares as a company, but for some limited time period. Okay, you will redeem it after some specific time. So redeemable preference share means some specific period. Some specific period is there, like you are issuing for 4 years, 5 years, 10 years, like that. So that is going to be redeemable. Acha, now one very important point here, let me tell you now also only. We will be repeating that point again, don't worry about it. See, in India, yes, in India, if you are issuing preference shares, you need to redeem after some specific time. Yes. So let's discuss this point. So in India, there is one point which you need to remember, that if you are issuing redeemable preference shares, okay, for all companies, maximum life of that preference shares can be 20 years. है ना? But there is one exception. There is one exception. What exception? If you are infrastructure company, I hope you can recall this point. If you are infrastructure company, then you can exceed this 20 years, and at that time your maximum years is going to be 30 years. Correct. So remember, in India, when you are issuing preference shares, you can always issue preference shares with some specific, maturity. Like you can issue it for 5 years, 10 years, 15 years, like that. But exception is if you are infrastructure company, you can issue it for max 30 years. So that is what redeemable preference shares. Yes, these shares are issued on the condition that the company will redeem them after the specified period or even earlier at the company's option. ठीक है. Then next is about non-redeemable preference shares. Non-redeemable preference shares means shares that do not come with an arrangement regarding redemption. Yes, no redemption is there. Yes, no redemption equal to no maturity, means for infinite period you are going to issue this. That is what non-redeemable preference shares. After that, you have convertible preferentials. Remember, whenever you see this term convertible, always remember, okay, whether you are issuing preferentials, just give me one moment, whether you are issuing preferentials or debentures. Okay, this point is for both the sources of funds. If you are issuing this preferentials or debentures, and as soon as you see this term convertible, ठीक है, if this term is written before these preferentials or debentures, means you are going to receive right. What you will receive right to convert it into equity. ठीक है, this is the right you will be giving to preferential holders as well as to your debt holders. That is what convertible means. Convertible means you are giving right. You will give right to whom? To equity? No. Equities will never get this right to convert it into any other factors, like preference or debt. You are giving this right only to preference and to debenture holders. So always remember, if convertible word is written, yes, before your preference or debentures, means you are getting the right to convert it into equity. That is what your convertible means. Convertible means you are giving right. Now right means you have the option. As a holder of this preference or debentures, you are going to receive the option to convert it into equity or redeem at the due date. Okay, so this is not obligation. This is not obligation. ठीक है, no obligation is there that compulsorily you need to convert it into equity. So that is the point for convertible preference shares. चलिए, so here we discussed about different types of preference shares, and these preference shares are very important. See, in exam they can ask in case study pattern and without option questions in MCQ pattern. So this is all about preference shares. Now this, section numbers as per Companies Act is very important, and their provision is again very important. Even they asked in your PYQ. Okay. So let's start with the very first section of 43 as per Companies Act 2013. Here they are defining what is the meaning of share capital. Part of issued share capital already we discussed here. See here, that when we talk about share capital, we have two types: A, that is equity; B, that is preference. Yes, again we discussed on your left side what are the differences between equity and preference share holders. Same thing we are going to see in your section 43. This is a part of issued share capital with preferential right. Now, what rights you are getting? You will get fixed dividend, yes, amount or rate. That is going to be taxable or tax-free as per the situations. Then, capital repayment means here with or without premium in case of winding up or premium. Means when you are going to redeem at the due date, how you will be redeeming it. That is what they are talking about. Then, deemed as preferential capital, even if it titled to participation in surplus dividends or participation in surplus on winding up. So this is your section 43. Now, section 47. 47 talks about voting rights on preference shareholders. So now this point is very important. Yes, now this point says when you are issuing preference shareholders, generally what we say, generally we say preference shareholders, you will not get any right to vote. है ना? Always you need to remember this. Generally we say preference shares you will never get right to vote. है ना? This is the assumption. This is always we need to say. But if in question they are asking about section 47 or voting rights of preference shareholders, then remember if company does not pay dividend, yes, or if dividend is unpaid for 2 years or more. Remember this point is very important. This point, this timeline. If company does not pay dividend for 2 years or more, then preference shareholders get the voting rights on all resolutions, means on all you can say notices, on all decision making. They will be placed before the company. Yes, now they will be getting the authority to take the decision to say yes or no. But what is the meaning of 2 years? So let me explain you here. Let's take one example. Okay. So let's create one timeline over here. So this is your financial year 25-26. This is your financial year 26-27, 27-28, 28-29. Okay, so here let's say company paid fixed dividend to your preference shareholders. Okay. Then in next financial year, company incurred losses, so company never paid any fixed dividend. Okay. So this same scenario continued because of the losses. This is your loss year. Again in 27-28, company incurred losses, no dividend. Then you can see here consecutive years. This is the first year, this is the second year. So in this financial year, means from this financial year 2029, company preference shareholders will get right to vote. Yes, this is what section 47 talks about. Yes, 47 as per the Companies Act talks about. Yes, this is your financial year, but remember this needs to be in continuous manner. If you are saying this is a financial year, let's say one more, let me give you one more example because this is going to be again very common doubt. So let's take one more example here. These are your financial years. Okay, let's say 25-26. Again you have 26-27, 28-29, and 29 and 30. Let's talk about profit or losses. Company incurred profit, company incurred losses, company incurred profit, company incurred losses. If company incurs in this manner, okay, so dividend will be paid in the first year, not in second year, third year, not in fourth year. Then section 47 will not be applicable. Why? Because here your losses are not in continuous manner. Okay, your losses needs to be in continuous manner, like 2 consecutive years. You cannot say 1 year today, I mean in this financial year we didn't receive, previously, last to last year we didn't receive, but previous year we received. No, you cannot do that. If you are not receiving in any financial year, means for consecutive years, then you will be getting right to vote in all your decision making. So this is about your section 47. Now coming to section 55, which says issue and redemption of preference shares. Now means redemption means at the time of some specific timeline you will be providing, like 5 years, 10 years. That is what redemption. So generally, as I told you, without life, you cannot issue any preference shares. That is known as irredeemable preference shares. So irredeemable preference shares are prohibited in India. You can issue only redeemable preference shares. And what is the maximum life? That is 20 years. But there is one exception for infrastructure projects. Can issue for 30 years subject to annual redemption of prescribed percentage of shares and fulfillment of specific terms and conditions for redemption. So this is given as per section 55, and for this you need to remember you know section number and what are the points given under this. So only these three section numbers you need to remember: 43, 47, 55. Yes, 43, 47, 55. Again I am repeating: 43, 47 and 45. Just remember this. Okay, now, so here we complete your one part. Okay, now coming to next topic, that is going to be warrants. Okay, so warrants are again combination of your debt plus equity. Okay, you will see some portion of debt, you will see some portion of equity. So warrants are what? Warrants are giving you the rights to purchase a company's stock at a specified price and at a specific date. Means what? See, this is kind of a bond, है ना? This is kind of a paper. Let's say here is your Reliance company. Reliance company gave one paper to Mr. Bhanu. Okay, here is Mr. Bhanu. Let's say Reliance company said, Mr. Bhanu, we are offering one paper. Okay, this is one paper, this is one document. Now, as per this document, we will be giving you shares of our company after 1 year. Okay, after 1 year at the rate rupees 1500 per share. Yes. So Mr. Bhanu said, "Oh, I'm interested for this, but the condition is Reliance says that see there is one terms and conditions which you need to read. So as per terms and conditions, if you want to purchase this, bonds, or if you want to purchase this document today, okay, today you need to pay, let's say rupees 500. Okay, today you need to pay rupees 500. Then only after 1 year we will be providing you equity at the rate of 1500 per share. So here, are you giving any ownership today to the to this Mr. Bhanu? No, we are not offering any ownership to Mr. Bhanu. Correct? We are offering this ownership after 1 year. But what else we are giving here to Mr. Bhanu? We are giving one right. Yes, one right to purchase after 1 year, that is specific date and with specific price, that is 1500. Then what is the benefit of this Reliance company? Today Reliance company is getting 500 rupees. That's the benefit. You know, Mr. Bhanu will get this benefit after 1 year. है ना? But today Reliance is getting the benefit. Let's say Mr. Bhanu will execute in the financial year 26-27. but Reliance is getting the benefit in 25-26. So that is what warrants mean. Yes, this document is known as warrants. Correct. So please remember this point. This is very important. And yes, so this is about warrants. Correct. Now, one very important and very repetitive question you can see from this point. This is very important and PYQ topic, like how to value warrants. So remember, you can value warrants just like your options. That is, you can use the method known as Black Scholes model. So in your ABFM, you need to remember this name, but I think in your BFM, you have numerical question based on this. Okay. Though numerical is again given in your ABFM, but majority of the times when they ask the question from this, they asked only theory based question like how to value warrants and how to value warrants with the help of Black Scholes model. Correct. Next, about convertible debentures. Debentures means here, debentures means this is about borrowing. है ना? This is about borrowing. So when you can convert your borrowing into equity, I told you na, if you see convertible means ultimately you are giving right to convert it into equity. Yes. So here also when you are actually borrowing from bank, no, you are borrowing from public. That is what debentures. So to the public, you are giving option, you are giving right that public, if you want to convert it into equity, you can do it. But remember, long-term convertible debentures is a long-term debt, and these are transferred into stock after some specified period, and this is what you are giving option to them. And generally, these are unsecured bonds. Unsecured means there is no collateral linked to this particular debenture holders debentures. Yes, so this is about convertible debentures. Very easy, very interesting one. Now, coming to one more very important, you can see, number of times in your exam, that is mezzanine financing. So, mezzanine financing is what? Again, this is a type of hybrid financing, means you will be seeing debt plus equity. Now, how this particular mezzanine financing performs? Here, your subordinates to senior debt, but they ranks above equity. Again, this is going to be, you can say, rank above equity. Then what is the benefit we are offering here? Here we are giving again option to convert it into equity or receive equity. But again, why we are using it? Generally, we use this for business expansions, acquisitions, or for buyouts. Yes, here why we are using this mezzanine financing? We are using this mezzanine financing for business expansion, acquisitions, and buyouts. So you need to remember mezzanine financing is generally used at the time of business expansions, acquisitions, and buyouts. I hope now you know what is the meaning of acquisition, buyouts or business expansion. Business expansion means like Reliance started Jio, that is business expansion. Acquisition means, Jio merged with Hotstar, that is what acquisition. Buyouts means when you are purchasing one particular segment of the company. So that is what mezzanine financing. For this, through this mezzanine financing, you can take the funds and you can fund your business for the expansion, for the acquisition, or for the buyouts. Chaliye. So here we complete your important terms. Let's quickly solve few questions based on this. So areas of dividend payments are distributed to the preference shares, often known as, they are saying whatever areas, yes, because company didn't earn profit, then also in your future years you are getting dividend of that particular year, then that is what, that is your participating. No, that is non-cumulative. No, right answer is cumulative. Right answer is answer D. Preference shares are hybrid financial products with elements of, okay, so debentures, equity shares, debentures and equity, and none of the above. So right answer is the preference shares are hybrid because they are holding combination of debentures plus equity. Why debentures? Because debentures, when you are issuing, you are going to receive redemption value plus interest on specific time, plus equity means here you will be getting ownership or after debentures only you will be paid. Yes, so that is what preference shares are also holding. Preference shares, they are getting fixed dividend, but are you going to pay them first? No, they will be paid after debentures. So because of that, you are going to see they are holding both the combination. Okay. Now this one is your homework question. You need to say which option is correct, A, B, C, D. Let me read the question for you. Mezzanine financing is often used by companies for day-to-day operations, business expansion, acquisitions, or buyouts, paying employee salaries, or D, reducing working capital cycle. Okay, so this one is your homework question. Let me know which option is correct. And remember, if you are planning to clear your CIB, then do join my telegram group, because in this telegram group you will be getting some quick notes, short notes, formula sheets, some important updates which are very relevant for ABFM. And if you want to enroll in our upcoming batches, or if you haven't started your preparation, then you can use this coupon code, that is Y895.